Daily chart. Impressive selling. Bears trying to get a measured move of this tight trading range here. But ultimately, I think we're probably going to find buyers in this general location. What are the chances that we get all the way down to 6,000 before we find buyers? I think it's generally low probability. Yes, consecutive strong bear bars, but overall, with how bullish we've been on the higher time frames, I think the odds are we're probably going to find buyers. Weekly chart, we have another bear bar closing on its low. Now, what are the chances we sell off all the way down here to 5,000? I think that'd be pretty low probability overall. Anything's possible, but overall, low probability. With how tight this channel is, right here, the first reversal up is probably going to be minor. Back to that daily chart, the chances of the market just immediately reversing all the way up here, I think is low probability. So we'll probably have to stall and go sideways. This is obviously impressive for the bears. It's trapping bulls into a difficult situation. But we'll see. Overall, I think buyers around this general location. Today, we had that really big bar, and I'm sure we got a measured move down of it. I know we did. It's probably somewhere down here. We had that really big bar, and it was a big enough bar that I thought it increased the chances that we'd start to have sideways trading. And so when we gapped down on the open, we ended up forming a trading range lasting a lot of bars. And this is a good starting point for the bulls. However, because of the gap down and then the sideways trading, instead of the bulls getting a reversal, obviously they continue to go sideways and the market broke to the downside. Similar structure to yesterday. The first bar of the day, we gapped down on the open, and it's a big enough bear bar and a strong enough bar. The odds favored some kind of second leg down. But first bar of the day, generally low probability to sell, put a stop above. There we go. The first bar of the day, generally low probability to sell and put a stop above the bar. And then bar 2, we have a reversal bar, good for the bulls, probably going to get some kind of second leg up. And we'll probably test the high of bar 1. Pause on 3. Not a great sell below, so probably buyers in the second leg. And then 4, we have that second leg up, but we have 3 consecutive bull bars. What about buying? Not ideal. Probably sellers in the upper third of bar 1. 5, reversal down, closing on its low. That's a strong enough bar that the odds are we're probably going to go at least a little bit lower. And because of that, I suspect traders selling down here are probably going to get some kind of second leg. So that's good for the bears. Follow through after bar 5 with bar 6. Good for the bears. But consecutive bear bars after the gap down with buying pressure, 2, 3, and 4. Probably more traders buying down here rather than selling. And then 7, we have a bull bar. Not ideal for the bulls after the consecutive bear bars, 5 and 6. So I expect probably sellers above 7, and we'll probably try and test back down to the 6 low. 8, bear bar, low 1 short. Not a great sell in this general location. It's a small second leg down after 6, and we'll probably have to test closer to the moving average. And then 9, we have a bull bar, 10 follow through. That's good for the bulls. Consecutive bull bars, probably buyers somewhere below, and we'll get a second leg up. The risk for the bulls is that the bears will see it as 2 legs up, rally on 5, rally on 7, pull back, and then consecutive bull bars, second leg up, 9 and 10. And they got a reversal down on 11. 11, bear bar, probably sellers in the upper third of bar 10. But we still probably will get some attempt at a second leg up. And then we got follow through on 12. That's good for the bears. Increase the odds we'll get some kind of second leg down, but near the bottom of this trading range, so probably buyers not far below. 13, bull bar, but probably sellers above and a second leg down. 14. And then 14, we have a bear bar. It's a decent bear bar, closing in the bottom third of the bar, but I suspect buyers in this general location. And then 15, a bull bar, but not a great buy above. However, we've had consecutive bear bars, 11 and 12, and then a pause, and then a second leg down, 14, pause. If it's possible at 15, such a small bar, we may have to go below 15 and then reverse up. And then 16, outside up, good for the bulls. Increase the odds we're going to get some kind of second leg, but big bar, big risk. So we may get a pullback first and test this breakout point here. And then 17, a bear bar, but probably buyers below the bar. And the bulls got the reversal up 18, 19. 18 and 19, good for the bulls, but right at the moving average. That's bad for the bulls. It's a second leg up, possible double top with 11. What about buying at the market? Some bulls will, with the understanding that they're probably going to be disappointed if you're buying right at the moving average, and that increases the odds that we get a reversal down and test back to the 17 low. And then 18, bear bar, outside down, almost outside down, but a bear bar closing near its low. That's bad. That's a problem for the bulls. And always in bulls probably get out below the bar. 21, follow through, good for the bears, make it a small second leg down. And 22, we have another bar down, but now we have 3 consecutive bear bars, 21, 20, 21, 22, probably buyers in this general location. And therefore, probably with the tail in 21, tail in 22, really not great for the bears. But with 3 consecutive bear bars, there's probably sellers above the 22 high. Decent bull bar, 23, good for the bulls. But you can see where it closed. That's bad for the bulls. Looks like there's more sellers above the 20 high than buyers. Because of this bar being as big as it is and enough of a surprise, I expect we'll probably get some kind of second leg. And then bull bar 21, good for the bulls, probably going to go at least a little bit higher. Or bull bar 24, 25, another bull bar. Now we have 3 consecutive bull bars, 23, 24, 25. Strong enough breakout that I think we'll probably get another leg up, but we may have a wedge. 1, 2, 3, or 1, 2, and then 3 subdivided into 2 legs. So if we get a bear bar closing on its low, it's probably worth getting out of longs. Bear bar 26 closing on its low. That's a strong enough bar for the bears that I think it's worth traders exiting above the bar or below the bar. Follow through 27, not great, but not a good buy above 27 either. And then you can see we have a bull bar 28, and there were sellers above the bar, and the bears got a second leg down. 30, 31 consecutive bear bars, good for the bears. Probably going to get at least some kind of, we may go a little bit lower, but it's possible this is a higher low from this rally here. And instead, we broke to the downside. That might be a strong enough surprise. We get a second leg down, but probably disappointing follow through after that bear bar. And then we have a bull bar 33, but after a 4-bar bear breakout and a 4-bar micro channel, really not a great buy. And then a bear bar 34, low 1 short. Not a great sell after 33. Some of the bulls who bought above 33 disappointed 34, and then they get out on the bounce on 35. And then we continued to drift sideways to down 36, 37, 38. 38 breaking out below the 16 low. Probably more buyers down here than sellers. We have a gap, the 27 low and the 35 high. And so you have to be wondering if this is going to lead to a downside breakout. At the moment, probably buyers below. But the bulls, they really need to stabilize and get the upside breakout. Bull bar 30. Bull bar 39, good for the bulls. But let's see the follow through. And then the follow through 40, strong enough bar closing on its high. That increases the odds it may go a little bit higher. So we'll probably get some kind of second leg. And the bears managed to get the 3 consecutive bear bars, 41, 42, 43. 41, strong enough bar, probably going to get some kind of second leg down. And then we got a pause on 42, and then we got a small implied second leg down on 43. But really not what you want to see if you're a bear. And then the bulls, they got a second leg up with 45, but after 3 consecutive bear bars, 41, 42, 43, not a lot of traders interested in buying above the 41 high, and therefore bulls took profits and bears sold in that general location. 45, bear bar, bottom of a tight trading range. Not a great sell below the bar. And because of that, I suspect there's probably more traders buying in this general location than selling. And then the bears, something interesting happened. They managed to get follow through selling with 46, 47, and that's a problem for the bulls. It's similar to what happened yesterday. We had the bear breakout. 34, 35, and then we got followed through 36. $46, $47 consecutive bear bars, and then the bears got more follow through, 48. So that's probably strong enough for some kind of second leg down, but it's possible the second leg is small, and then we test back up here. Bull bar, 49. Not a great buy above, but probably okay to exit shorts, anticipating that we have to get a small second leg up. Below one short, probably buyers below, and you can see instead of finding buyers, the market got followed through selling, and then we drifted off into this tight bear channel on the way down. That's a strong enough breakout, 54, 55, 56, that whatever reversal up we get is probably going to be minor, and we'll probably have to retest the lows. But because of where we are in the general location of the daily chart, you always have to be concerned of some sort of surprise upside breakout. 57, not a great buy after the tight bear channel. Probably okay for bears to exit, and then 58 follow through, but you can see what happened. Instead of getting more follow through after 58, the market just started going sideways. We got a small second leg up, 63, and then reversed down. And then the bears got another bear bar, 64, so a low two short. Bears are hopeful that it's similar to this. Sideways trading, downside breakout. They want sideways trading and a downside breakout. Low two in a bear trend, you can take it. And then if you get a bull bar, it's probably worth getting out. Not a bull bar on 68. Some bears will exit due to the disappointing follow through. And if they did, they got trapped out of the outside down bar, 69. And then you can see what happened. Bad follow through, 70. Some bears buy back their shorts and bulls buy. And then instead of breaking above the moving average, we just started going sideways in this overall range. Bears, they got a triangle. Bulls got a triangle, 73. They tried to break above it and they failed. The bulls who front ran the buy on 73 during 74 got trapped, and a lot of them gave up on the sell-off. But now you're at 6,400, and that's not a strong location for the bulls. So interesting overall. We sold off, closing on its low, and now we're setting up the potential for a gap up on Monday. So some traders, they'll buy into the close, taking a chance of a gap up on Monday, and other traders, they don't want to hold over the weekend. Now they're faced with a tough decision. Do they wait until Monday or Sunday night and then potentially miss a possible gap up? So it's making it difficult. Plus, traders buying calls, if they're buying options, now they have weekend risk, which is another difficult situation as well. For stop orders, you can sell below 1, but not ideal. I think better to sell below a bar like 5, stop above 4. And if you do, you probably get out of shorts above 9. And then this is tough. This is a trading range, reasonable to buy above 9. You get consecutive bull bars, you expect a second leg up. But if you're trading for stop orders and always in, what do you do here? Do you exit? You exit down here? Probably not. I really don't think it's all that worth it. And so I think it makes it difficult for traders who are selling right here. Give me just 1 second. Like I was saying, bulls can buy, but then really difficult in here. Consecutive bear bars. If you sell, odds are the bulls are going to get a second leg up, and the bears are probably going to get a second leg down. It's really not ideal. If you're selling below 12, better to just put a stop above 12, and then you exit as 14. If 16 starts to reverse up, if you buy above 16, stop below 16, I think it's okay. You probably get out below 20, but if you do, how do you probably miss this up here. And then bears selling below 20, I think that's a tough trade as well. And bears that can sell below 26. And where do they get out? I think it's reasonable to get out below 39. And if you do, you probably sell again, maybe 46, 47. But I think it's just in general, I think that's tough to do. And then if you get out below 49, do you sell again in here? You can. But again, I think it's overall tough. And then bears, they get out above 57. And then, if they're really, really determined, they sell below 64, stop above 63, and they get out above 69. And then lastly, if they're trying to stay always in, maybe they sell below 74. But it looks easy in hindsight, but it's not as easy as it appears, because you look at this kind of day and you think, yeah, I should have just kept selling below every bar. And then you take that same logic going into next week, and you start getting days that have a lot of trading range price action where you buy all the way up and then you get this endless pullback. And then you get a second leg up here. So you buy up here only to watch the market sell off. The whole point is, we're probably going to start having more sideways trading next week. And while these past 2 days were obviously bearish and strong, that's probably not going to be what Monday is going to look like. For limit orders, I thought probably buyers below 1, sellers in the upper third of 1, buyers below 2, scaling in lower. I thought buyers below 7 or 8 for a bounce. And I thought probably buyers below 13 and buyers below 15, probably sellers above 17, scaling in higher. I thought probably sellers above 23, probably sellers above 28, and then probably sellers above 41 during 44. And, through here, I think it's really difficult overall for traders. You can sell at the moving average if you're aggressive, but not all that easy. And then buy the close, sell the close. Really not great. Buy the close, sell the close. Maybe sell the close in here, but bottom of the range. And then, maybe sell the close 48, but a relatively big bear bar. You're probably better off selling a pullback at that point. And then that is probably it for buy the close, sell the close. But, maybe this is probably the only sell the close, and selling 48, I think it's more difficult than it appears. Let me take a look at questions. Someone said, what you're recommending is confusing and seems to be the opposite of what Al Brooks says in his first book, Trading Trends. Can you explain why it's not a trend and sell for any reason? It seems a perfect example of selling for any reason. But yeah, well, let me see when he, overall, I thought, here, I'll give my thought for a couple of reasons. One, we had basically a similar day. We had a gap down, rally, and then a trading range, and we broke below the range, and we just kind of trickled all the way down. And then today, we had a trading range open here, sideways, and we broke to the downside, lasting the rest of the day. And I thought, getting that, I thought that happening twice in a row was fairly low probability. In other words, big bear bar here and another big bear bar, I thought that was fairly low probability. And when you're over here, and you see this bear breakout right here, and you see that this bar here, it still looks like mostly a trading range. And by the time you see this bar here, I think it's tough to want to sell this far from the moving average. So for me, I'd rather wait and see a pullback in some sort of second entry. And you see what happens. The market now goes sideways to down for a lot of bars. And at this point, now we're starting to get a tight trading range with a lot of overlapping bars. We touch the moving average here, sell off, and now we have a bear inside bar for a second entry. So for me, really, I don't want to sell below a second entry like this in the middle of a tight trading range in something that I think is climactic and that I think has higher time frame risk of getting some sort of reversal. So yes, by definition, with the moving average, it is a bear trend, but I just don't want to sell this late in the trend. And obviously, not selling there, you miss out on this sideways to down. But even selling below the bar, and you sell right there, what do you do here? Do you get out? Do you get out on this doji? Do you get out above this bar? What do you do right here? If you get out above that bar, where do you sell again? You can argue selling right there, but it's the same thing. Now you're selling in the bottom third of another triangle, tight trading range, just above the moving average. So it's possible that instead of breaking the downside, we trigger the sell and reverse up instead. So that was my overall issue. When you get a lot of buying pressure on the open, normally the day continues to stay a trading range. All right, so overall, it'll be interesting to see what Monday brings. I think we're probably going to bounce. I don't know how far, but next week, probably going to have a lot of this type of trading. So trading range trading over the next several trading days, but we'll see. Okay, thanks everyone, and I will talk to everyone later on.